See, previously I kept talking about certain things in the corporate finance. We discussed capital budgeting, we discussed time value of money, we discussed operating leverages, financial leverages, and dividend theories. So, what are the basic objectives of all such things? The important thing is that so, what is the important thing? The important thing is to achieve success, and how you will become successful. The thing is successful. To become successful, you need to have certain things in your mind. That what the thing is that your if you have knowledge, I would say, and if you have experience. If merely these two things are together, this becomes a lethal combination. Okay, I'm coming to the part of discussion. I know that I have to cover up the topic today, cost of capital. Okay, but before that, knowledge and experience. I'm telling you that you acquire knowledge. If your knowledge and experience, I am saying with the combo of these two will make you get succeed, provided if you are determined to get succeed in a proper manner, then only you will be successful. Merely knowledge alone or experience alone will not make you successful. For example, if I say, like here, if I say the necessary knowledge, okay, necessary knowledge and meaningless, for an example, if I say just like that, meaningless experience, do you think so will it make you successful? Do you think is this enough? No. Knowledge, necessary knowledge is fine, but since your experience becomes here meaningless, that is why you are not successful. It is moving simultaneously, knowledge and experience are together, but same way unnecessary knowledge, most of the students they try to expertise in all the subjects. They want to know each and everything, whether they know it, they do not know, but they have heard somewhere acquiring knowledge is a blessing, so that's why they will acquire knowledge. No, and say unnecessary knowledge, and no matter whether you have a meaningful experience, merely these things will not make you successful in the market, in the job market. Okay, so what is required is that the both the things should be in substantial ratio, adequate ratio. Knowledge, yes, knowledge, the necessary knowledge you have, and meaningful experience, it will then assured guarantee that you will be successful. So just coming to the my part of lecture, which what I was discussing, since you have discussed and willing to know that what is knowledge and what is experience, and does education have something to do? Yes, now education is imbibed through knowledge and experiences as well. So we are not talking about merely education, but these two characteristics I have discussed, the knowledge and the experience. Now coming to my part, what I was discussing about the cost of capital. So just merely let you know, guys, what is cost of capital and how will you distinguish between. There are different cost of capital. Okay, so one by one we will start in different sections. So the thing which I am gonna tell here, the cost of debt, then we will discuss here the cost of equity, of course. Okay, and we will discuss the cost of preference shares. Okay, cost of preference shares, and then we will also discuss the cost of debt, equity, preference shares, and cost of retained earning. Okay, this is also very important concept to understand. Retained earnings. So when we talk about the cost of debt, what do you mean by the cost of capital? Cost of capital, I have already explained to you that it is nothing but an expectation, expectations of investors. Investors divided into two parts: the risk averse investors and risk taker investors. Okay, so I'm not going to explain the types of investment, but both types of the investors, whether they are the risk takers, whether they are the risk averse investors, they have some expectation from their investments. Investment can be done in debt, like debentures are issued by the company, bonds are issued by the companies, and other debt based instruments. Equity, yes, I told you that shareholders, they invest in equity, in IPOs, in the primary market, and in shares in the secondary market. Preference shares, yes, they are the board of directors and family members of the entrepreneur of the company. Okay, so they invest in the preference shares, so they have expectations in the form of the dividends. And retained earning is the amount which is left, which is not distributed among shareholders in the form of dividends, but kept as a part of reserve, in order to make some different investments in the future. Cost of debt, we will discuss perpetual debt. We will discuss about the perpetual debt, okay? And we will also discuss irredeemable debt. Okay, perpetual debt is also known as redeemable. Sorry, irredeemable. It is irredeemable, and this is a redeemable redemption, because redemption is that after a certain period of time, the amount is given back to the investors. Okay, so perpetual or irredeemable debt, in which only the interest is paid. Okay, only the interest amount is paid among its investors, debt investors. Okay, for an example, if I say there is a bond which face value is 500 at the rate 10% debentures. So we have to find out the cost of debt. It is denoted as KD. So KD will be on 500, there is 10% interest. That means 50 cents will be the part of interest, and net proceeds, because it is a face value, so we will like this and into 10%. So it comes into 100. Okay, this is 100. Okay, so that is, and this 10 is deducted, so 10%. Okay, the answer comes here 10%. So the cost of debt is 10%. Now we can derive or write formula on the basis of this equation. As I told you that I have written what did I written? I just mark here again. I wrote here KD this 50 and face value 500 into 100, and the answer is coming 10%. Okay, so the cost of debt is 10%. From this statement we can derive one formula also. So KD for the perpetual debt, so that will be the interest. This we can write as a NP. I'm telling you what is NP. NP is a net proceeds. Okay, this is a net proceeds of the debentures or the bonds, whatever. So the formula we have derived here, this is KD is equal to I upon NP into 100. So that is what we will do in this chapter. Now there are certain things. I have just given you example of the face value. Sometimes it happens the bonds or debentures are not issued on the face value, but sometimes they are issued at discount, sometimes they are issued at premium, sometimes there is a flotation cost involved, sometimes or most of the times, but in practically eventually you will see that apart from taxation, the some discounts, premiums are also imposed on these types of the instruments. So one by one we will take a look here. So just this focus on this example. 500 10% debentures are issued okay, among the shareholders. I have not taken here as the flotation cost. I have not mentioned the premium nor discount, now taxation. So just in a simple way, this formula becomes KT is equal to I upon net proceed into 100. Okay, so that is what the thing is, and we will see another part in next lecture.